Welcome to the Aul Financial Hour Podcast with Steve Aul.
Steve, let's talk about what's really important, and I'm talking about your grandbaby. How did that go this weekend?
Oh, it was fantastic. Short weekend. In most cases, her mom was the first one to come out there, which is what it should be, and she helped out that first week. Lori got to go out there. Her father got to come out, and then, so I'm a little bit late in the process with some things going on at work and some travel that I already had scheduled. And when I called my son, he says, "Dad, you're coming at a perfect time." He's starting to respond to things. So when I got out there, it was making little noises. You made a noise, he could make a noise. Or if he made a noise, you made a noise, he made it back. Smiles, watching his eyebrows kind of go up and down. But to watch the reactions instead of, as a newborn, basically lay there, sleep, eat, cry, and go to the bathroom. We had a ball. The weather was beautiful, so we went to a place where there was a little lake. My son Matt lives outside of Denver. So we had lunch and just happened to have it with a family that was from St. Louis that he had grown up with.
Oh, wow.
They got 3 boys, and they're like 7, 5, and 4 type of mentality. And it's like, whoa, do they have a lot of energy, And I said, I'm glad. I was that typical father that wanted a son first.
Yeah.
But I was so glad I had the daughter first. Because there's nothing like a little girl to just wrap herself around daddy's finger, and then you get a young lady growing up, and then you get the energy of Matt. So there was completely different things for the two of them. But it was just a fantastic weekend. And with them being as far as away, I don't get to see them as much. But the greatest news was, oh, by the way, we're coming home for Christmas next year.
Oh, that's exciting.
So her mom lives here. So it's like that to me was probably the biggest thing from the whole weekend. Yes, the pictures, me holding my grandson. We put it in our weekly market update. Newest advisor in training type of a mentality. It goes from there. 3 generations of Auls. We did the whole thing, and it was a ball.
I love that.
Absolute ball.
I love
then we
that.
get to this week.
Yeah.
I'm one of those people that really doesn't pay real close attention to college basketball. So I'll go down through it, and I kind of looked at the bracket, Duke, and then try to figure out how to go from there. A school that I went to back in the 70s when I played baseball, and we won the Small College World Series, David Lipscomb is actually in the tournament this year. So I got to go for the Cinderella story there. But for me, a lot of people say they watch the, quote, Super Bowl for the commercials. Now, March Madness, I want to know what Spike Lee, Charles Barkley, and Samuel L. Jackson are going to be doing. I think those commercials are the greatest thing since bubblegum. And just the way they play off of each other, and they've been doing it for years. But to me, that's that part of March Madness that I probably like the most is, all right, bring on the Capital One commercials.
Yeah, give me the good stuff. Exactly.
But those guys are fantastic. And this first week, I can still remember when I first got started in the industry, we did dinner presentations the first week of March Madness, and nobody showed up.
Yeah, then you've quickly realized not a good idea.
Not a good idea. So Megan does a very good job. The very first thing she does when we look to the next year's calendar, when's March Madness? Schedule around it. You can do stuff on the Tuesdays and Thursdays afterwards, because after that first week, they only play on the weekends. But don't ever think of doing anything the week of, because to me, that is that fun part where it starts at 5 o'clock and it doesn't end. It's just fantastic. Like I said, I don't watch it all the time, but I do enjoy watching the college basketball tournament. I think it's the upsets. The kids. Some of these guys are 17, 18, 19 years old.
Sure.
I think it's fantastic.
All right, let's jump right into it here. When you hear about these big numbers that people, they've saved or they say that they need for retirement, at times it can make you feel bad, make you feel under par, right? Well, according to new data from the Employee Benefit Research Institute, only 3%, I'm going to repeat that because it's important, only 3% of retirees have saved over $1 million. So that means that there's a lot of folks out there planning a successful retirement on a lot less. So, Steve, what's your message to someone listening right now who believes they can't retire until they reach this certain big magic number?
Yeah, that's that one. And I still remember a commercial, if you'll think about it, when people are carrying around their number. And the only thing that mathematically have to be recalculated every second because rates of returns and everything affect it. But I think the biggest thing that I look at, and it usually comes in a very simple example. I have a client that comes in with $2.7 million, and I have a client that comes in between $450,000 and $600,000, and ask the question, which one do you think can retire? Mm-hmm. Everybody always picks the one with 2.7. And when we ran the analysis, he couldn't retire.
Oh, no.
Yeah. Why? Because he had a lifestyle where he was spending about $250,000 a year, and he was only 60 years old. So the rate of return that he'd have to get would be so high to keep it established. So he couldn't really retire. Now we look at the other couple, Kevin and Diane. They had a pension. Their Social Security. When we started to look at what their Social Security and pensions were going to be when they retired, they were pretty well cash flowing in retirement. They weren't really going to be pulling a lot, if anything, out of their portfolios. So when we ran the numbers for them, they said, what? We could retire now? And I said, yeah, and your income probably wouldn't be that much different if we turned on both Social Securities and you turned on your pensions. So that's the thing that people don't know. So if you've been asking yourself, when can I retire? Will I run out of money? The only way that you can figure that out is to come in, sit down with us. Let us run that comprehensive retirement plan. We're going to look at things like, how are you going to replace your income? What's the best way to take Social Security? Let's optimize it. Not necessarily the largest amount, but optimize it. How is your investments going? Are you getting the reward for the risk that you're taking? And then we'll look at the legacy planning. If we're going to be leaving assets onto our kids, I believe we should leave it as tax efficient as possible.
Billionaire Elon Musk is turning heads in more ways than one. Not only is he hunting for government waste, we know he's the head of DOGE, right? The Department of Government Efficiency, but he also told Joe Rogan, his podcast, that Social Security is just not sustainable.
Right. Social Security is the biggest Ponzi scheme of all time.
Right, explain that.
Well, people pay into Social Security and the money goes out of Social Security immediately, but the obligation for Social Security is your entire retirement career. Like if you look at the future obligations of Social Security, it far exceeds the tax revenue. Basically, people are living way longer than expected. So you have more people who are retired that live for a long time and get retirement payments. So the future obligation, so however bad the financial situation is right now for the federal government, it will be much worse in the future.
All right, so let's break this down here in a couple different ways. I don't think anyone denies we're living longer. You know, Social Security, is it going to run out? How's that going to work? But also, you have Musk here comparing Social Security to a Ponzi scheme, right? Ponzi schemes are illegal. Social Security, not so much. So it does highlight the solvency issues, like I mentioned here. We all know that benefits could be cut by 25% by 2033 if Congress does nothing to shore it up here. But I want to also remind folks, Musk isn't the only one to say this. A while back here, Warren Buffett said the same thing back in 2005. So with possible cuts on the horizon, how do you think Social Security is going to fit into our retirement plan, Steve?
I think Social Security will be here. Do I think it's going to look the exact same way as it does right now? No, I don't. I remember when I was getting out of college and Social Security in the 80s was about ready to fail, kind of like it is now. And Congress then got together and voted to tax part of the Social Security benefits. And then in the 90s, the same thing happened again. So Congress again got together and said up to 85% of your Social Security could be taxed. So they kind of kick it down the road until it's like the last minute. And we're looking at, well, Steve, it's 2033. Don't you consider that a last minute? And I say, no, not really. I don't think we're going to see anything till probably 2029, 2030. And that's just because of the fact changing it is going to be difficult. Some of the things that have been talking about is, one, limit the amount of Social Security that people can get. Have a minimum of Social Security for those that are on the bottom part of it. And how do we make this thing work? And I think Elon probably hit it the best. Social Security, a lot of people don't realize what OASDI stands for. Old Age Survivors Disability Insurance. Social Security was brought in for people that had outlived life expectancy, so they did not go poor. Okay, so when it started, life expectancy for a male was like 62, and you had to be 63 to get the check. I don't think we're going to go to life expectancies now 86, and you got to go to 86 to get your check.
Sure.
But that would be the equivalent of when they had it. And when Social Security started, there was 33 people paying in for every one that was receiving it. So it was something that just ballooned and got bigger and bigger and bigger and bigger. But then we started doing other things with it. I'm not saying those other things are bad. Please don't jump on me for that. Spousal benefits. My wife never worked outside the home, and I loved both of my kids, and I couldn't have done her job. I believe she deserves the Social Security benefit for being a stay-at-home mom. Then we looked at disability benefits. Those things all came into the equation because there were so many people paying into it and very few people were taking money out of it. It kept getting bigger and bigger. Now we've got about 2.5 to 3 people paying for everyone that's on it. And I do agree with Elon. As it is, it's unsustainable. Mm-hmm. They cannot continue to do it. Under current laws, if it hits when the trust fund goes away, they cannot pay out more than they bring in. That's when they're talking about saying the benefits will decrease. And I have to look at it for myself. I've never heard of this of anybody from Congress. And if you hear me say this, I'm going to tell you I believe it's unfair. You don't have to call me and tell me that it is. But I believe in the future, Social Security is going to be means tested. What do I mean by that? I mean that if you've got $40 to $50 million in assets, you might not get your Social Security check.
Oh, wow.
And I go, whoa, that'd be unfair. That guy paid into it his whole life. And I said, I agree 1,000%.
But does he really need it?
But does he have to have it?
Yeah.
You know, you look at it to the point, and I don't know if they do or they don't. But do you think Warren Buffett might be able to get by if he didn't get his Social Security
I think
check?
he's going to be okay, yeah.
What about Elon Musk?
Absolutely. He's going to be all right.
Jeff Bezos?
Sure.
And I think a lot of the people in those categories, see, I don't know what does Bill Gates not or do it? Yes. Because these guys might be taking out $4,000 or $5,000 a month. Mm-hmm. When the average check's around $1,600 to $1,800 a month, that means a lot of people are down there in that $900 to $1,000 bracket. They can't afford a 25% decrease in their Social Security. Mm-hmm. So I think they will means test it. People see if they can't do that. Folks, they means tested Medicare. We all used to pay the same price. But now those of us that have a higher income have to pay more for it. So I believe that is going to happen. But I still believe that most people think, I'm going to retire, I'm going to turn on my Social Security, and I'm going to do all at the same time. I believe that taking Social Security and optimizing that benefit is the most important thing that you can do. It's not a quick, easy decision. I like the idea of the lower earner of the two starting when they quit working, because there are tests to make sure you get your Social Security check. The higher earner of the two, delay as long as possible. Mm-hmm. And that's basically for the survivor benefit. If you're single, it's going to be when you need the money. It's not as difficult for a single person. So I believe optimization of your Social Security is the best thing that you can possibly do. So if you're 59 and a half or older and are not currently taking your Social Security, because I can't do a lot if you are, call now, ask for the Social Security optimization. Now, I'm going to warn you, it can't be done in a vacuum. I can't sit here and say delay taking Social Security you're 70 if I don't know if you have the assets to get you there. Mm-hmm. So I have to do a full plan to optimize your Social Security.
The stock market has seen some very down days lately, much of it in reaction to President Trump's tariffs, which many worry could reignite inflation. Here's CNBC's Jim Cramer after a day of heavy losses recently.
Today was horrendous and, again, unnecessary. We do not need to end up on the canvas every day like this. If the president already knows what country he's going to hit and what products will be made more expensive, perhaps German, Japanese, Korean cars, there'll be more pain, but it can be planned for. Tell us now. This is a mess.
So we know Wall Street is in correction territory. That's just, it is what it is. Everyone's asking, is a bear market coming? Steve, what are you telling your clients?
Well, I think the first thing was let's look at those two terms that you just did. What do we mean when we say a correction? That means the market from its height has dropped by more than 10%. People don't really realize that happens on almost an annual basis. And when I tell people that, I get that deer in the headlight look. Like, what do you mean? Bear market being down by more than 20%. on average happens about every 7 to 8 years. They're parts of market cycles. Everybody loved the bump after the presidential election. They love that increase in the market. Well, when markets get overbought, what happens? They sell off. Then what happens? If they get oversold, then people buy back. That's what I'm saying. Corrections are part of the market. I think our market got way ahead of itself right after the election. Now, I do agree with Jim. If we had a good idea of what was going to happen, it would take some of the uncertainty around it. So I believe that's what's causing the volatility of the market, Jim. Just like Jim said, if you just tell us what you're going to do, now we know how we could arrange ourselves to do it. But that's the problem. We don't know what the markets are going to do in the future. So the question I have, are you prepared for whatever the markets do? I believe in the 3 Ps. People brought it to me very early. Steve, can you get me a predictable income? If I can do that, that's fantastic.
Thanks for listening to the Aul Financial Hour Podcast.
Insurance products are offered through the insurance business Aul Insurance Group, LLC, AIG. Aul Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Aul Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and Aul Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Aul Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Aul Financial Group, LLC.
This radio show is intended for information purposes only.